Welcome back to Opening Bell. Let's get you set up for the trading day. Joining us now is Robert Schein, Chief Investment Officer at Blanke, Schein Wealth Management. And so first and foremost, thank you so much for being with us this morning, Robert. As we know, when geopolitical tensions flare up, frankly, investors instinctively rotate into things like oil, gold. But you do expect the market impact to be short-lived this time. And so what really gives you that confidence that this situation will not turn into a more prolonged market-moving conflict?
This is a moment in time where investors have to take a step back, take a deep breath. Our hope is, and our belief is that this geopolitical conflict in Iran is going to be hopefully short-lived. I think everybody, including the markets, hope that's the case. But we're seeing the disruption, obviously oil, and the impacts negatively on the oil markets globally. So at this moment in time, investors just have to take a breather, position their books, if you will, their investments accordingly, and take advantage of some opportunities as you look longer term through this conflict.
Okay, and so to shift gears a bit here, you argue about some of the confusion around AI, that it's one of the biggest reasons we've seen the S&P and tech stocks stalling this year. So what specifically does it seem like investors have really struggled to grasp when it comes to like the broad-reaching AI builds?
Well, if you look at what we just heard from NVIDIA and Broadcom, the AI story is still real. It's scalable. We're seeing this on all aspects of the economy, and we're still at the early stages of AI. So very specifically, technology is, a good 30% of the S&P 500. And so it moves the market quite significantly to the downside, as we saw earlier in the last, let's say, year to date, if you will. But there are some green shoots with underneath that. Even prior to the Iran conflict, we did see a bid in some of the software names that sold off greatly. So that's kind of constructive underneath the market as we're seeing the software sell off.
Okay, so as far as the software sell-off is concerned, as it's been seen as, rational, irrational, whatever you want to call it, but obviously sentiment-driven, how do investors distinguish between high-quality AI-exposed software names and some of these legacy SaaS companies that deserve perhaps lower valuations?
Yeah, you kind of want to look for that quality within the, let's say, software companies, those that have the moat, if you will, those that, artificial intelligence is only going to make those software names stronger moving forward, not weaker. I think the market is just parsing through that as we go through the software names.
Okay, and so you've owned NVIDIA since about May of 2023 and still like the fundamentals, but you did note that the stock has shifted from a momentum trade to a more core infrastructure compounder. What does this mean, though, for expectations around their stock performance going forward? Because I will say, I was a bit even disappointed with some of their movement around earnings that were stellar last week.
Yeah, the NVIDIA movement post their reporting was to be expected, if you will. And NVIDIA has run up so much. And so what the markets actually and investors are actually looking for is that litmus test to find out if the story continues. Is it real? NVIDIA, even in the last few days, are making steps to make those moves even stronger internally. So they're taking a step back from even their third chip, if you will, that's going to go over to China, and they're going to move into making the internal chips here even stronger. Their third-rate chip is still 10 times oversubscribed, not to mention what they have in the pipeline moving forward.
Okay, and you do still see a path to an S&P 8,000, but warn the road could be bumpy and obviously depend on some of the big tech re-engaging, frankly, here. What catalyst do you eventually think could bring some of the large cap tech into this dominance?
As we said before, so if you look at 2025, you have only 3 sectors that were outperforming the S&P 500. Now, as we saw the market broadening out, we have about 7, 8 sectors prior to the Iran news right now and the sell-off that we're experiencing. That being said, the broadening out, let's say in industrials, and even we could see financials catch a bid, those have to catch up. But we could see, we're in a midterm election cycle, and every time you have a midterm election cycle for the markets, there is that volatility. Back end of the year, we have right now, one big beautiful bill is a catalyst, $150 billion that we're going to see in tax receipts to the consumer. Consumers are going to spend that money. It's not going to be in the savings, if you will. We also have certainty with regards to what we're going to get on the election cycle. And we believe we're going to have divided Congress. And that might not be a bad thing, because it will stop the spending in Washington. That's really the inflationary issue. Amongst others right now is the inflation concern. But right now in the short term, it's oil. And that's the story of the day, and that's why the markets are moving.
Okay, and so as far as some of your stock picks, I wanted to get to those. You did add to positions in names like GE Vernova, Palantir, which has been like an unstoppable force, but as really being these AI infrastructure plays in the broader AI economy. So what makes these businesses, in your opinion, maybe more durable in the midterm than a lot of these other crowded AI trades?
Yeah, so in the AI space, we do like the AI adjacent names. And so specifically, you mentioned Palantir. If we just look at the geopolitical environment that we're in with regards to how Palantir helps, they have the AI platform that, oh, by the way, is up 137% year over year in terms of that business unit. But in the aerospace and defense, what they're specifically doing is that platform helps put together and have the systems talk to each other, from satellites, drones, as well as the radar systems integrated into one military system. So, Palantir is one of those stocks where the Apples and the open AIs just simply can't live without. So that's one of the reasons why we really like that story.
Okay, and so you were also telling investors to stay fully invested and buy the dips despite this volatility. And so for someone feeling maybe a bit fatigued by the uncertainty, what do you see as the biggest risk of trying to time this market right now?
Yeah, it's not about market timing. We've always had cash on the sidelines, and we always let the market come to us. Like we said before, we're a believer in active money management, and there's individual names that are providing tremendous opportunity. We're putting that cash to work, but we're not jumping in wholeheartedly just yet. It's all about the dollar cost averaging and taking advantage of individual names, not the indices, if you will.
Okay, so really good, important takeaways, and so appreciate your time on this Friday, and really great, I think, insight into the broader market. Robert Schein, Blanke Schein Wealth Management, thank you so much. Now,
Blanke Schein Wealth Management is a group of investment professionals registered with HighTower Services, LLC, member FINRA and SIPC, and with HighTower Advisors, LLC, a registered investment advisor with the SEC. Securities are offered through HighTower Securities, LLC. Advisory services are offered through HighTower Advisors, LLC. This is not an offer to buy or sell securities. No investment process is free of risk, and there is no guarantee that the investment process or the investment opportunities referenced herein will be profitable. Past performance is not indicative of current or future performance and is not a guarantee. The investment opportunities referenced herein may not be suitable for all investors. All data and information referenced herein are from sources believed to be reliable. Any opinions, news, research, analysis, prices, or other information contained in this research is provided as general market commentary. It does not constitute investment advice. Blanke Schein Wealth Management and HighTower shall not in any way be liable for claims and make no expressed or implied representations or warranties as to the accuracy or completeness of the data and other information, or for statements or errors contained in or omissions from the obtained data and information referenced herein. The data and information are provided as of the date referenced. Such data and information are subject to change without notice. This document was created for informational purposes only. The opinions expressed are solely those of Blanke Schein Wealth Management and do not represent those of HighTower Advisors, LLC, or any of its affiliates.